Well, Saudi Aramco is soaring today after the world's largest IPO debuted on the stock exchange in Riyadh. Shares rose from an IPO price of 32 Saudi riyals to, as we're seeing there, 35.20. And joining us now to discuss is Schork Report Editor Stephen Schork. And Stephen, I just want to get your quick reacts to the way that we saw this max out at the 10% gain at its debut, because going into this, it didn't sound like you were so optimistic that we might get that.
Oh, well, I'm extremely pessimistic on the future of Aramco. Of course, we did have the IPO today. And of course, we did have a lot of buying. 75% of the institutional money that this IPO represents comes from Saudi companies, funds, government agencies. 97% of the retail investors are coming strictly from Saudi Arabia. So when you put a gun up to your countryman's head and tell them to buy, guess what? They buy. But we're talking about a company now that notionally is 1.4 times more valuable than Apple. I think that's quite bizarre, because what else happened today? That Greta Thunberg kid from Scandinavia just got Times Person of the Year. The future is not oil. And yet we've got a company, an oil company, that now is theoretically 1.4 more times expensive or valuable than Apple. That doesn't jive well as far as I'm concerned.
Yeah, the irony of Greta Thunberg being named Person of the Year is not lost on me, nor is that quite troubling metaphor that you're using when you talk about holding the gun to the head. I mean, we're talking about Saudi Arabia, and people haven't really talked about the fact that some of these national security concerns, the fact that the oil refinery was attacked, and some of those concerns being overlooked with this IPO, that's one thing. But even more so, when you talk about oil demand and the peak in the prospectus laying out that oil demand would peak in 2035, some people saying that that's even too optimistic when you're talking about the shift away from oil, perhaps to natural gas here.
Yeah, absolutely. When we talk about peak demand and going out as far as 2035, the only reason why you make a forecast that goes out that far is because you're trying to make astrology look respectable. So what we've seen now in the here over the last 2 years was a significant, massive tectonic shift, not only in supply-demand fundamentals, but of course, longer term out, the mindset of this younger generation coming into the market. So clearly, I do think, and I am a believer in peak oil demand, 2035 to that point. Yeah, I think that's a little too far out. I think it will happen sooner rather than later. And again, why you would want to own a oil company when all of the major Western oil companies, your BPs, your Shells, your Exxons, they don't even brand themselves as oil companies anymore. They're energy companies to this point. So I do think it is a risky endeavor long term out.
But many investors are in the markets to make a lot of money. So Aramco, it's now the world's most valuable listed company. And Saudi Arabia was actually trying to sell a 5% stake ownership in it to foreigners. So why wouldn't people who want to make a lot of money get a stake in this?
Well, fair enough. And you're correct. 2 years ago, the initial idea was we'll sell 5% of the shale, we'll raise $100 billion. But Saudi Arabia went on its roadshow into London and New York. And guess what? Western investors balked at the idea. So instead of listing this shares on the London Stock Exchange or the New York Stock Exchange, you had a domestic listing because there clearly wasn't enough demand from the investor community. So instead of selling 5% of the company and getting $100 billion, you sell it for 1.5% shares, and you raise $26 billion. Again, not an insignificant amount of money, but far below what the what your best case scenario was just a couple of years ago. And we led off this segment, and I am on record saying that this IPO is 10 years too late. That had this occurred back in 08, 09, even during the depths of the Great Recession, you're looking at oil prices that dipped but quickly rebounded over $100 a barrel.
Yep. Well, I mean, let's go ahead and separate the issues here, Saudi Aramco aside, and look more macro here at the oil market overall, because Chevron expects to write down as much as $11 billion of its assets in the fourth quarter amid a slump in gas prices. That would be the largest write-down by an energy producer in years. So, I mean, when you look at this, Mr. Schork, do you go ahead and say this could be the beginning of what had started to be a tough year for oil and energy companies, and then the beginning of an even worse 2020?
It's going to be an extremely difficult 2020 for the oil and gas industry. We're talking about $140 billion of debt that is coming due. This is debt that was reissued 5 years ago when oil prices did break. We had oil prices at this point in 2014 at about $90 a barrel. Today, they're $50 a barrel. The same situation for natural gas. So we had a partial comeuppance in the market in 14 and 15, but Wall Street allowed the industry to kick the can. They gave them a little bit more slack in the noose. 5 years, those lines are coming due. Wall Street's no longer interested in acreage.
Yep.
Okay, they're no longer interested in the growth. They want to see the money. So you've got a lot of debt between over the next 2 years. As I said, $140 billion coming due. There's going to be an extreme amount of bloodletting in this industry over the next 2 years. It's going to be a very difficult road to hoe.
And Stephen, I've read research that on an adjusted basis relative to where oil prices are, I mean, things in the industry look even worse than they did back in 2015. So I guess, are there any bright spots, or I guess another way of putting it is, what is the future of this industry then if oil prices and demand don't really come back?
That's it. I think, and this is why we are, the future is natural gas. This is why we just mentioned Chevron. I mean, they did walk away from that $52 billion bidding war for Anadarko against Oxy. Clearly, natural gas is the fossil fuel of choice. It's your cleanest burning. It's your cheapest to produce. It is your most cost productive. It is the engine of economic growth, especially here in my home state of Pennsylvania, but all throughout the petrochemical industry. That is the future if you allow it to grow organically. The issue now here is that we've got significant political winds that are actually talking about banning natural gas. So, which is just, to my mind, inconceivable of what this will potentially do, the hit that this will have on the entire economy should it come to fruition.
Yeah.
So you do have to make your investments, and your investments are going to be more towards the natural gas market and away from the oil market, which, as my understanding is that Chevron is writing down their natural gas, correctly so, because the market has crashed. Why? Because the market is a success in that you've had a tremendous amount of investment and we are producing a tremendous amount of natural gas. We're making the demand outlays out there, but they're still a few years away, and Chevron's taking the appropriate steps at this point.
And you got to think, just to bring it back to Greta Thunberg being named Person of the Year, that a shift to a much cleaner energy source seems inevitable at this point. But Stephen Schork, thank you so much for joining us. Appreciate you taking the time.